Hi, this is Zach here with the Bulletin Board Heroes here at Vox Markets for Monday, the 8th of August. Starting off as usual with the FTSE 100, where we've got 7,500 as the barrier there, notionally that resistance line there from April. What we're looking for is an end of day close above 7,500, obviously, to get up to the post February resistance area at 76.50. That could be seen as soon as the end of the month if we can get a break through 7,500 sometime this week. Otherwise, it's back down to the rising 200-day moving average at 73.73, and then another test for support there. If you don't like the market here, then maybe that's the area to potentially buy the dip at. Only below 7,300 in the 50-day line, really making this or making us question the idea of a return to 2022 resistance. The RSI just around the low 60s, so still overbought rather. We've obviously bounced a long way from the quadruple bottom that we had in June and July, near 7,000, and I suppose it doesn't feel like that, but the market actually has done a lot of good work over the past month. But at least while we're above the 200-day line, looking for that 76.50 zone by the end of this month. Onto a market which is not quite so perky, but looking better than has for quite some time. If I can get the chart that I want. Here we're looking at Bitcoin, and looks good in terms of one particular feature that we have here, and that's the rising 50-day moving average. As you'll remember from previous Bulletin Board Hero updates, rising 50-day line near the low can be the a leading indicator on a move to the upside. This looks like we're going to get that early this week. End of day close through the late July peak there at around 24,600. Could be enough to take us up to 28,000, which is the top of that falling November trend channel. And obviously above that, then we can say that we're looking towards a trend change, which would be quite amazing after the horrors of the declines from back in November itself. Only back below the 50-day moving average, 21,500 on an end-of-day close, really delaying the prospect of 28,000, given that we have that rising 50-day line and the RSI right in the correct area in the low 60s. Moving on to the stocks, and first one up is Artemis, which certainly on the move at the moment. We had a gap down, with actually two gaps down, or in fact even several gaps down in April and going into May. So the gap higher today through the 50-day moving average, an island reversal. Several bear traps on the way in June and July as well. So that's also means or suggests that the bears have been, or the final sellers are out. Bullish divergence line in the RSI window since May, which obviously adds to the idea that this is going to be a decent move. And the view now is that above the 50-day moving average, around 1.75 pence, we're going to head up to the top of that broadening triangle from May, up to the 3.2 pence area. That would also be the area of the 200-day moving average, and also the top of that gap there at the beginning of that month. So all roads look as though they're leading to 3.2 pence, while we hold above 1.75 for Artemis, and 3.2 perhaps seen by the end of next month, if we're really lucky, by the end of this month. Onto a stock which has been covered by one of my fellow chartists over the recent time, saying hello to Noel at the moment. But here we've got this uptrend line here from January. That is around 14.5 pence, and that suggests that while we're above 14.5 pence on arrow, we have further upside, ignoring the sort of the dull price action we've got either side of the 50-day moving average at the moment. Seems to be quite a quiet market, but above 14.5, looking for 24 or even 25 pence as soon as the end of next month. Given the way that the 200-day moving average is still rising well, and that we have that multi-tested uptrend line from back in January. Moving along to a stock which looks like it's finally on the move in the right way. Here we've got Sizzle. As I said, I think yesterday or very recently, on most times there's been a rally here the day after the shares have backed down. This is probably one of the better performances we've seen after a spike in the stock. So maybe this seller is finally out, at least while we're above the 50-day moving average at 1.55 pence. We're looking for the 200-day line around 2.6 pence, no matter whether we have a bit of consolidation after the recent spike that we've seen in the shares. But the shares in general backed by a December bullish divergence line, so that does suggest that unless we're back below the 50-day moving average, this could be a recovery or a long-awaited recovery for Sizzle. On to fusion antibodies, which is one of the more obscure situations in the market, famous for its very widespread and very quiet management, but looks as though that despite all that, with the new CEO coming on board, the market's taking a better view of the company. Rising 50-day line, which, as I said, with Bitcoin is a plus. We've had a mid-move consolidation and a breakout above the 200-day moving average at 80 pence, looking for as high as £1.40 at the top of the broadening triangle from this time last year. And that seems to be a reasonable expectation, given that that was and is basically 1 year resistance as well. So impressive turnaround there for Fusion. One of the stocks of the day is Joules Group, and here we've had, after several gaps to the downside, we had a gap to the upside. Island reversal here, bear trap island reversal above the 50-day moving average of 35 pence. We could head up to as high as 80 pence or even 90 pence at the 200-day moving average. Time frame on that up to the end of next month, and only really back below the 50-day line at 35, delaying the upside scenario. Can't be more specific than that. But we are backed by bullish divergence with the lower lows for July, but RSI remaining the same as it was on the February dip. On to Lexington, which had I think, a JORC upgrade today. Here we've had another gap to the upside. This is the third gap to the upside that we've had since June, so it looks like a major re-rate is here. We've also got a rising 50-day moving average there at 2.65 pence, 2.55 pence rather. But at least while we're above the 50-day line, looking for 4 pence at the top of that broadening triangle from back in November, and that could be seen by the end of next month. On to Rambler, where there has been all the good stuff really here. Bounce off the floor of that falling trend channel there around 17 pence. We've got bullish divergence, double tested bullish divergence in the RSI window. That does suggest that the minimum on the upside here should be 23 or 24 pence at the top of the channel, and perhaps up to as high as 28 pence by the end of next month, while we hold above the 17 pence zone and that support line there from back in November. Onto a stock which also looks like it's trying to make some decent moves. We already had that U-shaped recovery for the stock, for Touchstone rather, and broke the neckline resistance there at 59 pence. We've now gapped through the 50-day moving average at 70 pence, which suggests that we should at least get up to the 200-day line at 91 or 92 pence, perhaps by the end of this week. Anything above that, I think, would be quite a bonus, and would suggest that a more major re-rate was on the cards. Just how high we could go after that maybe was suggested by the rising trend channel that I'm trying to draw at the moment, and that would be, obviously, that's heading up to 125. That would obviously be very welcome for shareholders, but let's see if we can get up to the 90 pence zone first while we're above 70. On to Tower Resources, where you can see that after the horrific gap down, it looks like we're going to have a bear trap here. So anything above the old low of March at 0.21 on an end of day close basis would signal the bear trap gap reversal and suggest that we could head back up to 0.28, which is or was resistance just before the gap down that we had earlier this month. So that's looking encouraging, as is the bounce off that falling support line in the RSI window from January. So above, really above the 0.2 pence here, looking for 0.28 on Tower. On to Tirupati, which I've covered quite a lot recently, and here looking particularly healthy on funding news. We're breaking the 50-day moving average, which we haven't done really properly since April. We're also due an end-of-day close through that old peak there from back in July around the 42 pence level. So above 42, looking for 50 initially, which is what we were looking for by the end of this month previously. And then if we can get an end of day close, or we close above 50, could be back up to the 200-day moving average area at 65 pence, maybe by the end of next month. At this stage, only back below 35 pence. Recent support really delaying the upside scenario. Finishing off with Xtract Resources, which has shown a double bottom here, a sort of gap up a bit this morning. Here we've got bullish divergence with a double bottom, but a higher RSI trace. That does suggest we could head up towards the 50-day moving average of 4.1 pence by the end of this month, especially while we make no new lows below 3.25 pence, which seems possible. That's it for me today. More updates tomorrow.